Hello, everybody. Crack week is over. I am feeling better. I should be completely fine by Monday, but didn't get to spend the Thanksgiving the way that I wanted to. At least I got to watch some football. Anyway, the SPY, like I said, there's nothing to really, like I said, I guess 2 days ago, there's nothing to really psychoanalyze here. Uptrend is strong. You can see at the bottom the SPY relative strength line, even though it gets adjusted because of the way that the dividends get issued versus the S&P 500. Full steam ahead. Nothing is wrong whatsoever. The QQQ, yeah, the relative strength line is weak, but all it's telling me is rotation to other areas of the market. That's obvious when I look at the DIA, the IWM, MDY. Nothing is wrong whatsoever. I remain basically fully invested, almost 200% on margin, a little bit less because I'm not getting filled on some stocks that gap up and run away from me, like DEC, like my ad signal on A Lab. And it's okay because there's just going to be more and more signals. This for this weekend, I only have one new long signal. It's a pretty good one, but the earnings and sales, the earnings is good. The sales growth isn't really there, as it's more of a theme. I am long GGAL and have been long. This beautiful cup with handle breakout is just, I mean, this is just perfect action, but it's almost too perfect. We don't even get 50 SMA test for pocket pivot point signal additional accumulation signals. And I just don't like chasing in this market. So the pocket pivot point signals that are coming away from the 50 just aren't good enough for me. At least they're at the 21 EMA. And that's more than I can say for some stocks like ACHR. I tell you what, guys, when this one broke out above that recent high here, this is a Kathy Wood name. Now all I need is just a handle to form. Uh, okay, I guess I'm not going to get it. So that's the kind of market we're in right now. It's just full steam ahead, runaway momentum, and that's great. But it makes additional purchases a little bit difficult. So getting back to BMA, look at the relative strength line, lower left, upper right, and a perfect, almost linear formation. I love that. Big, tall, green volume bars in this entire chart. I love that. Perfect bounce off the 200 SMA. I love that. And look at all the pocket pivot point signals. I love it. The lack of red balance of power bars since April. I like that. So I really, really like this setup, but still overall, if I have to grade it based on all the metrics I look at, including fundamentals, sales growth being the most important on the fundamental side, I really like to see sales growth in the last 2 quarters be over 25% for me to love a stock. That isn't just you have green shoots all over it. Like ACHR, I love this, but without a consolidation, I can't chase. I just have to be impressed by everyone that can chase. And that's normally a young man's game. I'm not young anymore. I used to chase these kind of moves, but they were, I haven't really seen even anything like this in the late 90s when I started to trade. I didn't really even see moves like this. They would if they did this initial move, they would consolidate at least for a week or two before continuing allowing for better entries. It is what it is. It's a chase market. It works until it doesn't, and for all we know, it might work for 4 straight years. So there's no sense in fighting it. So with BMA, what I'm going to do is since I'm basically fully invested, whatever capital I have on hand for Monday, I'm taking all of it and I'm going to risk it all in this one. But I always attach a stop to the initial order. And then after day one, then we review those stops and see if they need to be adjusted. What I'm doing with BMA is I want to get long. Since it's closing so close to the high of the day, I'm just going to use the high of the day. Normally I would split it up like basically it ends up, this one probably be something like 55 above the closing price, 84.91, 45 above the high of the day. Instead, I'm just going to use the high of the day, attempt to get long at 85.58 using a 1% limit offset, which means if it gaps and goes on me, like MSTR, like the DEC ad, like the A Lab ad, so be it. I'm fine with it. There's going to be a ton more signals. No use in crying over spilled milk. And don't cry for me, Argentina, if this one gaps away from me. But with that group move in Argentina, with the way GGAL still looks. Want to get long above the high of the day on BMA. Now, if you don't have as limited capital as I do because you're fully maxed out long, I would calculate my size and risk this low or use the 50 SMA. And then how I would probably trail stops on this one, since the 21 EMA is right here by the wick, if this triggers and fills and closes below this, you'd be out of half below Friday's low a day. And then you could use the 50 SMA as your final stop, calculating your size from this low, which would prevent a full 1R if you use 1% risk of your entire account capital on this trade. But I'll be, if I wasn't already fully maxed out, I would be calculating my size and risking to this low, which is 73.06. High of the day is the trigger. Happy Thanksgiving, everyone. Going to go and wrap up the video lesson. Like I said, there's no reason to psychoanalyze this market. Full steam ahead into the end of the year unless price action tells us, hey, we got to back off. And for that to happen, I would need the SPY below the 21 EMA first, 50 SMA second, and I don't really start, like, I wouldn't even be remotely worried about this market until I see a series of lower highs and lower lows below the 50, and then an undercut of the 200 would just want me to get fully long with all of my account capital on the reclaim of the 200 SMA. I'm a buyer of all dips for the next 4 years, heck, the next 10 years, as the demographic bull market, the artificial intelligent bull market, should easily continue into 2035. We will have cyclical bears along the way, but I'm a buyer of all of them during this secular bull.